sitting down with one of the most astute, incisive market investors, but also someone who by far is the most entertaining. And we've heard him now for the last so many years, regaling us with his stories about the market, which is always a learning experience, but also telling us what the market looks like ahead. Samir, it's a pleasure. Thanks very much for your time. Great to have you here. First question, do you remain as bullish as you were when the last time we spoke with you? Or are you a little bit more circumspect?
I am as bullish on some stocks, bearish on some other. And so the end result is neutralish for me. Neutralish for us means when we revert to a 60% type net and waiting for what happens next. Like maybe, I don't know when we spoke last time, but normally for the last many months we were at around 70% or even 72% net. Now we are at around 60%.
What's weighing on your mind?
First is just the madness of the market, which you need a rest just from the fact that every day it goes up. And now I find that not necessarily whether I own those stocks or not, but some stocks go up on stories which themselves make me believe that there's no research going on anymore. Second, I now feel that a big risk to our market is our mutual fund inflows, because it's completely mis-selling what I understood in the last 2 days speaking to a few distributor stroke sort of semi-fund managers. And third is general year-end kind of tiredness. We don't want the start of the year, month, January, to be a negative month. It sort of weighs on our, first 6 months of our life. So I feel that in January I want to go in. See, today doesn't matter what happens to the market because we are quite ahead of the index and it's been a great year. So it's just a mix of all these things. And now we have this new story of what will be the election result, which unless it's very clearly positive, as in some 120 seats, it won't take the market up a lot. It'll sort of keep it around here, which means I can handle it with a lower net.
But to your mind, is there any risk on the other side?
Well, only today some tweets have been coming, which I never imagined till today morning.
Right.
But that would be wild if that happened. That would be like 5-10% kind of an event, negative. But I don't know, today it doesn't look that that can also happen, but who knows?
Right. I mean, but does the quantum of the win matter for the market?
Yes. So I think, as I was saying, if it is a win, which is what we thought, that win, but not like the massive win, then you are sort of okay, and then we'll have a new story next year based on global backdrop. And then we can say that, now the focus will be on rural or a little bit on maybe some tax rationalization. I was thinking, I still think, there could be a 1% corporate tax cut.
Okay.
Because in the beginning of the term, it was promised a 5% cut, which we thought would happen over 3-4 years, 1% per year.
Sure.
And now that US is going to do it, so we have to say, okay, we didn't do it then, we'll do it with 1.
Sure.
Now 1 may look small, but it'll again show that, okay, we are going towards it. And to make up that, do something more, do another divestment or do some ETF or PSU.
That can be managed.
A little bit you can manage, and you'll also have to have some...
But what if it is close? I mean, I'm talking about the outcome, the election.
I'm saying close to, as long as it's a win, I think we can justify it if the rest of the world is okay. It will be okay, that will be tough, but it won't make it a big fall. If at all, there's a fall, 2-3% here or there. But
right.
It's a loss, that is the scary. But I never thought of that till like a few hours before, that could also be a...
And why are you thinking of it now?
No, because I saw some Twitter for these guys who suddenly make it look as if it could be low. But I can't imagine that today, right now.
But the market is obviously not pricing that in. I mean, that's what I'm saying.
Neither is it actually pricing a 120 kind of a win.
Right.
They are pricing that you will win, but with some difficulty, which I think is okay. It's actually not a bad outcome, because you can say that after 22 years you won again, and elections are tough and things like that. So in the end, I also think that actually if you look at it for 2019, it doesn't matter to the market that whether the wins are 300 at that time instead of 280. What if they're 250, 240? In the past we've had with 160 a PM, and so as long as the BJP and Mr. Modi is there, how will it matter actually if it is 20-30 seats less, let's say? So that's why I think that there's no need to draw massive conclusions.
Correct.
If it is a victory of some reasonable, little bit, 5-10 seats more.
But I mean, this is also important because next year you've got 2 other important elections, Madhya Pradesh and Rajasthan, which are coming up. So
I'm not so into them today because I didn't know much about what can happen there. But generally there will be, and then therefore every election and just the fact that it's the last year will weigh if you lose. if you look. But that's what I'm saying. That looks a bit of a wild one. I don't want to be scared about that today. I don't think so.
Let me point to the other thing which has been weighing a little bit is the rise in the cost of, the yields basically rising. Why do you think that is happening? Because there is no telltale sign that growth is picking up.
Yeah, but I think that is more happening because of these one-off things, or maybe it's food and sometimes something else. And also low base effect, I believe, is the issue for last year. So we've also backed off a little bit from financials, not by selling, but our new inflows for last 2 months, which have been quite decent. We haven't put new money into financials, but our weightage, so from some 45 it had become, now it's some like 39, 40. It's okay, we can handle that.
But cost of borrowing going up for NBFCs in particular and financials in general going up, that would make a...
It doesn't make much of a difference because the other guy also has to pay, the borrower has to pay. I mean, it's not that it's all on an NBFC's account. The bottom line is that there are very few sectors. First of all, there's no pure NBFC. See, I own this wealth manager.
Right.
So they are NBFCs. They sell mutual funds. They, I guess, assume they sell insurance.
Right.
So in that, they're making a lot of money. Now, how to disentangle these into, some is doing an ARC, somebody is buying distressed assets. Right. There's so many other things than just an arbitrage of interest rate. But the point is, if you look at the universe of stocks, there are anyway only 40-50% stocks where you can imagine that they're growing some 20%. Okay, now they'll grow 18%. So that group is anyway a small group, and we can't give it up on one, inflation which is maybe temporary. Temporary means it could be for 5-6 months, but it's not like a,
I think the fact is that the cycle of rates going down, that is kind of now over.
Yeah.
And that is behind us.
But if we have seen in the past, there have been consecutive hikes. I think in US there had, 17 hikes. From I think 3 to 8 or something, the market went up. Right. A hike per se, first hike, second hike should not make anything negative. See, I think that Indian market first needs a global market to do well.
Okay.
Then we can...
That has been there. I mean, that has been doing very well.
So then we can underperform it. Sometimes there's a problem, or we outperform it. Generally, we've been outperforming over longer periods. But we, as an India-oriented firm, want our market to be first up. How much it is up is secondary.
Correct.
So if the world is doing well and we are doing slightly worse, I don't care. Unless we have a very specific India event, we will follow the world. Sometimes outperforming, sometimes underperforming. So right now I think, okay, so we will underperform a little bit as long as we are positive is the first. The second is that because there is money coming in from people who may have more choices, you want, I think, a double-digit return to be competitive in anybody's portfolio, either relative to fixed income or relative to other markets or in general cost of waiting. So that doesn't look so unreasonable in the backdrop of what is the situation.
And global markets are all kosher according to you? I mean,
I think global market is slightly better than Indian markets. Right. At least US I like a lot. Yeah, generally they're okay. What is the harm? They'll have a massive interest rate.
Because there also the run has been absolutely spectacular.
But there I saw for Hong Kong, for example, I believe 1/3 of the run has been one stock, which is Tencent, which has added, say, 300 billion this year to market cap. So it could be because they would have added maybe $1 trillion, let's say. I don't know exactly, but I read somewhere that. So even in US, I'm not 100% sure, but these 5-7 stocks would have called half the run.
The tech stocks.
These 5-6 Fag-Shank type stocks, they would have added 200-300 billion each. And so together maybe $1 trillion they may have added or some such number. And therefore again, there also it's narrow. But those stocks are very good, no doubt. But therefore, it doesn't mean that everybody is roaring and therefore they can't go up more.